Hello traders, just a very quick video just on our trading positions here just after the news of the Bank of Japan holding their monetary policy steady. This is Stu Narpan here, founder of Master the Markets and the Elite Traders Conference. So you can see over here we got three positions over here, as you can see. So we got the dollar yen, we got the euro dollar, and the dollar Swiss over here. Okay, so these are all the different positions that we have. Now let me just quickly explain how you actually come to take such positions. Okay, so let me just quickly explain. The first thing we always say, as in the three systems of three components of a trading system. First, you need to have a crib sheet like this over here. Always have your concept and your objective, as I've mentioned over here, concept and have your objective. It will be different for different trading strategies. Okay, so don't confuse them all into one strategy. That's very important. Next, that you will have rules for entry, as I just mentioned over here. So your rules for entry, as you can see. Then after, the next thing that you need to be looking at is basically your rules for stop loss. Okay, your rules for stop loss, which is all over here, initial stop loss and then trailing stop loss. Okay, segregate them. And then finally, then your target rules. You can further subcategorize target rules into pre-target rules and intra-target rules. What do I mean by that? That means if there are some kind of price shocks sometimes in the market, what would you do to get out of the market just immediately? Okay, sometimes if there's a market shock like today in terms of dollar yen and a 3 times ATR move, then you should just get out of all your positions immediately, because that's a very sharp sudden reversal from the market. Now your pre-target rules is all that before you get into the target, before you get into the trade, where are you looking to exit? This is all what it means. And then of course have your money management rules as well. Okay, so this is just an example of a crib sheet that you can look into. The next thing that you do then need is, of course, your journal, okay, which tracks of all the trades. Now before we go into the stats, what you really need is actually consistent execution. Okay, so each trade over here must be consistently executed, and this is why we have the strategy component where we got all the parameters listed down here so that we can consistently execute, because every parameter is now quantified. Okay, so that we get consistency, because if it's not quantified, you cannot get consistent. It will become, your results will become inconsistent. Okay, so this is why we do that, because all the components actually form the bigger picture of a trading system, which is a strategy component, which is your crib sheet with your money management rules. Second thing is your consistent execution, which comes down to your psychology component. This is one of the main things why we actually work on the mind continuously with our Vedanta Elite Traders. Especially in the morning, we do a very short 10-15 minute meditation, which actually, or you can call it mindfulness, which is becoming very popular now, even being done in hedge funds as well. That really gets our mind in tune so that it's in a present moment and does not skip to the past and the future, so that we're not gripped by fear and greed. Okay, I talked more about this in the Traders Essential Kit. There's a very special section just on trading and psychology alone. So that's the consistent execution part, which is all to do with your psychology. So do something on your mind every day. So continuously work on your mind. The things that we do with our elite traders over here is that just a 10-minute meditation in the morning. The third thing is your stats. Okay, so do have a journal like this. Record down every single trade so that you know how your system is performing and your percentage risk that you're taking on each particular trade. Okay, so see the reasons why you're getting into them, the date that you entered, the date that you exited. So every single trade that we take here at Master the Markets is all locked down, it's fully transparent. Okay, so this is one thing about us. The unique thing about us is that we're just truthful, we're transparent, and it's all public. You can ask us anytime and we can just give you this transparent records that we have, and we take it in front of people as well. So you can see over here, interesting enough, in this system that I just showed you in terms of the profit and loss statements, you see the thing is just not about these three trades. As we know, trading is just not about just trading it just for the day alone. It's just about taking it for the long run, the cumulative set of trades. Okay, now as you can see over here in this system, we did have a few consecutive losses over here. Okay, so as you can see over here, and then after that it did pick up over here 3.13, 2.58, and then finally then it picks up. After that it had a string of wins after that. Okay, as you can see over here. Now the critical thing what you need to know in every system is your drawdown. Now if you do not know your maximum drawdown, then what really actually happens is that when you get a drawdown like this, you will get fearful of carrying on with the system. Fear really grips you and you're then paralyzed of placing the next trade. So this is why you need to know the stats even before you get into the trade. This is why we do a lot of backtesting and research into the markets to just pre-warn us of what are the drawdowns that we should be looking at. Okay, so in this strategy called Smart Money, we've done all our research. We do know all our drawdowns as well. We do also know the year-by-year profits that average should be returning as well. As you can see, so far into the year, into April, at £10 a pip, we are £6,340. In terms of percentages, we're up 6.3%. In terms of institutions and everything, 6.3%. I mean, they'll be going in terms of percentage. In terms of retail traders, as long as you know your drawdown, your maximum drawdown, you can go for pip size positioning. But very critical, you must know your pip size positioning drawdown. Okay, this is very, I can't stress more enough about this particular point. But as a newbie trader, you know, I think beginning, just start off with 1% risk management, or even lesser than even 1% if you have to. So this is what I just wanted to mention in this very quick video, just about the 3 components that you need to be looking at. The crib sheet, have all your parameters, do consistent execution for that, keep working on your mind. We talked all about this in full detail in the Trader's Essential Kit. And the third thing is that have a trade journal that actually records all your stats, and you're continuously monitoring how it's performing against the results that you have researched and tested upon. Okay, and then put it across into a small account. So here is what we got. So here we got a very small account over here, which started about £8,000, £9,000. The point is that you're testing the system now. Okay, so you don't need to jump into putting all your life savings into it. So start to test your system. You can even start with £5,000. It doesn't matter. Here's what we're doing. We're just forward testing the system, and then after that we'll start to scale it and reproduce it. This is the whole essence of this. You're creating a strong reproducible model that can be then scaled up in terms of position sizes, in terms of percentage risk as well. Okay, I guess that's pretty much that for me. I believe this has been really useful and highly valuable to you, as it has been to the thousands of traders that we have taught. All right, okay, so till next time, as we always say, stay disciplined, follow your trading plan, and keep trading like a master.